Hey guys, welcome to another video. And in this video, I'm going to go through where I've been for about a week. No, I'm joking. In this video, we're going to go through everything we need to know about the dollar index. I know that it's been an interesting one, and there's been a lot of analysis gone out. And so price action has done quite a few things since the time we spoke. It's only right for us to go through where we're going and seeing where we're going next in terms of price action. So let's get started. Okay, guys, so first things first is going to be the dollar index. Now, with the price action analysis I gave, for those of you who want context, if you're not in the Discord group, please sign yourself up or join the invite link to get yourself in. All right, there's no difficult process. It's quite easy. You click on the link, follow through, and you'll be in the Discord channel where I share all the analysis that I give in these videos in written form, so you have something to work with. Now, with the dollar index, one of the most important keys from the context of the analysis that we were looking at is we do have the unfulfilled efficiencies filled. We have number 1 and number 2 filled. Now, a lot has happened. You can see that price took a very interesting U-turn, for example, down here. Price gave us the unfulfilled efficiency of supply, which is what we're looking at. The wick of this candle was supposed to return to supply over here, and it didn't. When the price did return, I gave the shout to go for one more long on XUSD pairs, as I've got here, and one more short on USD X pairs, so stuff like USD CHF. Now, when the price got here, the price did fill the efficiency that we're looking for, but we had a very interesting move here where we had a very sharp close beneath this area. Now, looking at this, you would have thought, okay, maybe this guy's analysis is not that great, and he doesn't know what he's talking about. Not so whatsoever. This price action here is what we will call a Judas swing. And this is when there's a fast push of liquidity into the market, which will sooner or later be filled out in terms of pip distance. Now, if we look at what we had here, strong sharp drop, then we had a few spikes here, including the NFPs on Friday last week. And if you look over here into this new week, the market has closed exactly above this area here. And from that point, we had a strong push long. Okay, so we've closed beneath this H4 demand area and above. Now, I'm not too concerned that the body of the candle has closed outside of this area. My main concern is to make sure that the price stays within this key range here, which is the bottom blue area, this large blue area here. Now, this large blue area here, if I put context to it, is a monthly supply flip zone. Okay, I'll go and zoom out even further in a moment for you to see what that means. And this reddish area, purplish red area is demand liquidity. So to put context to where we're looking at, we've had this monthly supply flip zone. Now, if you've never watched any of my videos before, you haven't looked at the dollar index chart at all, or just for a recap, this supply zone here is important because it's been around for 5 years. The price used it from 2017. We had this massive spike during lockdown, but the body of the candle didn't close above here. So you can see that resultantly, we had further shorting. Down over here, we had an important induction, which gave us the trigger we need to break above this area for the first time in 5 years, which was in 2022. The price returned to the other side, so supply became demand, hence the term of flip zone. This is when demand becomes a supply zone. And then we had an extreme long for the next couple of months until September 2022. At that, we've had a reversal here that has had no interactions between the highs, so no inductive activity to produce the short. This is just a natural reversal, and the price has pulled back here. Now, as the price has pulled back here 2 months ago, when I first gave out this call, the price gave us this induction of the low. We've broken market structure. All right, we've come to algorithmic price action ranges around this area, and we've come back to this same range right here. So now that we've had this pullback into the range, we're in the very optimal areas for a very strong long. Now, the highest point of this movement is a liquidity pool at 114.330, which indicates that price is definitely going to make its way back up this way. Now, why am I even looking at the dollar index chart for those of you who have never come to this channel or watched the analysis? Number one reason that we look at the dollar index chart is because the dollar index shows us the strength of the dollar compared to other currencies and commodities, and also other markets too. So to keep it very simple, when the dollar index increases in price, so we go upwards in price, it means the strength of the dollar is also increasing. And that strength of the dollar that's also increasing means that we have an increase in price action, volatility, and the strength of the dollar going on the long side. When the price is going short, it's the opposite. The dollar loses strength, and that means that any US dollar pair, so for example, USD JPY, USD CHF will be going short, whereas things like the Australian dollar versus the US dollar, Euro USD, Pound USD will be going long. Okay, so that's the correlation that we have. We get that inverse correlation between those major pairs. Now, usually you hear me call them XUSDs and USDXs, which means the X means any other pair. It can even be, you know, a commodity or even a crypto pair, because they do get under, or they do fall under that category. And the dollar strength does affect them also, and you know, stuff like the crypto market and the commodity market. But this is what it means. So now that you have the context of what we're looking at, this key area here, right now, we're in a very high probability area for a long. Now, if you think about the fundamentals of where we are, because fundamentals and technicals do go together, but technicals is faster than fundamentals. By the time they announce something in the news, price has already done it quite a while back. And this is why I always suggest to focus on being a technical analysis person rather than fundamentals. So fundamentally anyway, because inflation is the main subject here, in terms of the mechanism of how the dollar works and the world economy works, and individual country economies, whenever there's high inflation, as there's been due to the fact of lockdown producing a lot of monetary inflation, a lot of money was printed to support the economy from crashing, which means they printed a lot of money from the money printer. Now, to give you more context, whenever money is printed or currency is printed, there's two major ways that currency comes out from the printer or just circulates in society. One way is through productivity, through commerce, through business, through exchange, which will cause any country to increase their foreign reserves of another currencies. For example, let's say you in Taiwan and you have a business and you sell goods to US customers. Well, in exchange for your services, you receive dollars, and the more dollars you receive, the more currency you gain. Okay. If it's the other way around in the US, if someone had a business in Taiwan and they wanted to pay in dollars, then the US economy itself will receive its own dollars. Instead of printing dollars, dollars will come in through commerce. The other way that money comes through into the society or in circulation is by printing money. Now, printing money, because no value was attached to that currency, because currency represents an exchange of value, because no value was exchanged for that currency to be produced, it produces inflation. It broadens the money supply and it reduces the buying power of that currency, or the purchasing power of that currency, to be specific. So because of lockdown, we had something of that sort, because it was physically impossible to work in many instances for at least 1.5 to 2 years. And as a result, money had to be printed out. Now, that money has caused inflation, which is having effects all across the world. So to reverse that, the dollar, being the world reserve currency for the world, has or is doing what we call quantitative tapering, which is to burn the amount of currency notes in circulation. By burning the amount of currency notes in circulation, it equals to the dollar gaining strength, because if you reduce the monetary supply, or in essence, if you increase the scarcity of anything, it increases the demand for it, and therefore increase the strength and the price. Just like the price of gold, part of the reason why gold is important is because it's a very scarce asset. Now, my degree is in science and my master's is in pharmaceutical chemistry, and my degree, to be specific, is in chemistry. So I'm a science guy. Now, scientifically, it's around about, in parts per million, about 0.3 parts per million in the Earth's crust, compared to every 1,000 or 1 part per million. So gold is something along those lines from my memory. Now, it's about 0.3 to 1,000, something along those lines. But gold is very scarce in the Earth's crust, which is what makes it valuable. So scarcity is a key here. And burning dollars will also have a similar effect in terms of scarcity. Even though dollars can be created at any time, but that's basically the concept. So right now, the reason why I'm so big, and I've been talking about the dollar index, I've been so big on it, is because of this reason. Because quantitative tapering is taking place at the same time where price action is falling into this very key area for a long, it signals to me that we're going to have an extremely strong dollar coming out very soon. So bearing that in mind, now that you understand this, and the reason for all of that information is because the price will definitely take off long, and then that will give us opportunity to take some extremely fantastic swing trades, especially. Let's have a look at other major pairs. So now that you have this information, keep in your mind, I'm going to quickly go through the pairs that I'm looking at. Now, I'm not going to go through every major pair, even though I'd like to. I'm going to go through exactly what I'm looking at so we can work out the context of what it means for your own trading experience and what you can use this information to do. So the first one is going to be USD CHF. I've really come to love USD CHF. I really do like the pair. And I'm just going to go through the schematic of what the price is doing, and I'll leave the layout for you. So this was the trigger in 2021, which caused the price to actually take off for the long. Initially, we had the break of market structure here, and then we've had the return into demand, which was right over here. So this is really the foundational area that the price got into for us to have an extreme long like what we've had. So I'm going to put this here and put this in blue. Now, after that, we've had another demand zone. So if we're tracing price action here, we have another area of demand that prices form. So I'm just going to type it here, monthly demand. Now, what's a key thing to me, and one of the reasons why I'm not phased at all, I know that for those of you who are following the analysis, it might seem like all is lost and we're going short now. Not the case whatsoever. And I guess my silence probably put a bit more anticipation, like, what is he going to say? Has he given up now? Has he run away from his own analysis? No, I haven't. So if we look at price action here, the monthly area that we had here, when price took off for this extreme long from 2021 into 2022 September, the price actually didn't return to this demand zone here. Now, on the market order book, as I said, with price action, there are layers to it. The graphical price action that we see, candlesticks, or if you use bars or you use lines, whichever, I use candlesticks preferably. They give me the most information in the nicest possible way, so I prefer to use them. Now, looking at the price action here, the price didn't return to demand. Now, from a graphical point of view, this is unfulfilled efficiency. Price hasn't returned to demand. So the liquidity driving the price here isn't efficient, okay? On the market order book, this means that the market order book itself is imbalanced. And at the end of the day, all automated market makers, and order book managers are supposed to make the price balance. This is what it is. It's almost exactly like accounting. What goes in must come out, and there should be a balance of 0 on the when you came in and 0 when you came out. Everything should balance in. There shouldn't be any overs or underneath. It should balance out. And so this is the same thing with the market order book. So this movement we had last week seemingly looked like it broke the pattern of what we're looking for, because over here, for those of you who are more savvy with analysis, you would have noticed the weekly candles close beneath here. So it may seem like it's indicating that we are going short. However, the price took the opportunity in the high volatility situations that we've had to actually fill out this long-standing unfulfilled efficiency. So the first idea that I have in terms of a trade is that this week, and the reason why I didn't trade yesterday is because usually whenever there's a massive movement on something like an Easter holiday, the price usually fills out that movement with a reverse move that is almost equal to the move from yesterday. Now, I know that was a mouthful. I'll show you graphically in a minute. But my first idea is for a schematic is I'm looking for the price to take the low of last week. If the price takes the low of last week, that will be my trigger to look for a long, and that should be your trigger. And I will be posting out some entries so that you can all get in with me. So make sure you follow in and subscribe and share with your friends too. And join the Discord. Okay, I'll be on there live for you guys to see what's going on. And you can catch up on all of the trades that I'm sharing here because I will post them. So looking at the price action from here, I'm going to post this right here. If I go over to the lower time frames, the D1 and the H4, okay. Now, there is a key thing that I do want to say about the dollar index. I'm going to go to it very quickly and then I want to come back. If I go to the dollar index over here, and then we can go down time frames. A key thing to notice is that when the market opened this week, we have a liquidity gap here that the market has left behind. All right. A second thing to notice, and I had this marked out from earlier here, this is the liquidity gap I'm talking about. This is the H1 view. Now, when the market made this brilliant move here, okay, I've marked out this whole red range as a demand zone here. So this whole range here is demand, representative of demand. If I use the 30-minute, you'll see why I've done that. This whole area here is a 30-minute demand zone, but I'm sticking to the H1 just because we have a better view. But in line with the USD CHF analysis, there are two options that the price could do for us to have the long trigger, because we're in the absolute highest probability range of being able to have this movement long. Now, the first thing would be if price returns here, anywhere within this range, this will be a return of this induction here, and we can go for a long. So this is scenario number one. Okay, so I'm going to write this out, scenario number one. Okay, scenario number two, which is the extreme, would be for the price to give us one more induction of the previous weekly low, for price to take the low of the previous week. That would be scenario two. These are the last two scenarios that only two scenarios, in fact, I'll be looking at for where the price would be for us to have a long. So using the dollar index, which is not all I'm going to use to take the entry, of course, but pairing it with the analysis and then coming back now to USD CHF, if price forms price action that we're looking for on USD CHF as well at the same time. So for example, if the price reaches here and is taking the weekly low, then I'll be inclined to be ready to buy on USD CHF. If the price has reached here and we haven't reached the weekly low of USD CHF yet, then I'll expect scenario two to happen. Okay, so very simple price action analysis. So back to USD CHF. On the H4, this is the weekly low that we've had. And to put understanding to why I didn't trade yesterday, this is yesterday's price action. This is yesterday's price action here. And then here's today's price action right here. The price has, in essence, gone long by almost 100 pips, roughly. Let me just put this here from when the market opened. I'll zoom in a little bit so you can see this and stretch this out. So you can see here, the market has gone long by 100 pips almost. Okay, 84, look like 100 from here. And then by near the end of the day into the new day, all of the pips that were made yesterday have been taken back. So if you didn't trade, or you took a trade from Friday and you held it through until now, you'll still be at break even. So there was no point of trading yesterday. I guess you could have taken a scalp up and then taken a scalp down, but it would have been better to just enjoy the holidays. Okay. So now that we've got here, we only have a few pips left until the price is going to take the low, which is about 38 pips. And then we should be looking for a long. Okay. Now there is enough room for the price to get into this area by a lot. And then after from here, we can look for our long. So this is the first high probability trade I'm looking for, and I'm trying to keep it as simple as possible, okay, and give you guys the highest probability trades that I am looking at. Second pair that I'm looking at, okay, I'm gonna pull this here, is pound USD. Now, USD CHF, pound USD, I believe, to be fair, USD CHF and Euro USD have the best correlation, but there is a pair correlation between pound USD, USD CHF, and Euro USD, simply because of the dollar strength. Now, the dollar is a very influential currency, is the largest currency in the world, and it's the world reserve currency. So usually when the dollar has a strong theme of bullish or bearish activity on it or direction on it, then pound USD would, for example, or let's say long, and USD CHF will go short. So that pair correlation does help. So I like to use pair correlation when I'm using my analysis to work out what trades I'm taking and strength correlations and comparing different pairs between each other sometimes. Now, with pound USD, one of the reasons why I'm choosing this pair for this week is simply because of this area here. When the price gave us a short, now to give a bit of history here, in 2022, we've had the lowest pound USD price in history. The previous pound USD price was in 1985, the lowest one in history. And we've had a few pips lower than that. I think about 60 pips, 50 to 60 pips with this new movement we've had September 2022. Now, with pound USD, my only problem, even though I was expecting the price to give us a short, was always this area here. We have some highs here that didn't return to supply. And you can see resultantly, even though we had a lot of shorting, and it looks like a few pips, but it's actually over 600 pips. The price really struggled to keep this short going and maintain the bearish momentum. And if you see last week, the market took the same opportunity as it did on USD CHF to fill out this unfulfilled deficiency here. So if I was to put a little UF sign to show that the prices had unfulfilled deficiency, so UF, I'll change this to 8 and just make this red. Okay. So seeing that the price has wicked into this area and it's very simple, just like with USD CHF, I told you I'll keep it very simple. If I go to the H4 here, what I'm expecting the price to do, this blue line here is the previous week's high. I'm looking for the price reaction above the weekly high. Any good reaction here that can give us an induction, I'm looking for a straight short. Back down to 1.17 and beneath. Okay, I expect the price to really, with pound USD, at least push down. Now, there are some caveats to it. I do think pound USD would push short a bit less than other major pairs, but definitely would at least fill out these gaps here and come back to demand down here, which is about 110, okay, over the next year or so, or less, depending on how strong the dollar index moves. But this is my second pair and very simple. Now, to finalize this video, I'm wrapping this up already and you're thinking, no, that's not like you. You usually talk for longer. I wanted to keep it simple. So what do we need in terms of triggers? What can trigger the price to do this? Now, I always like to look at fundamentals as trigger points rather than as my foundation of my analysis. And the fundamentals I'm talking about is actual fundamental news, so FX news. So what I'm going to do, I'm going to go over to FX Street. We're going to look at what pieces of news specifically in the dollar we can get that can trigger the price to do what we need it to do. Now, what we're looking for is we need one more trigger on the dollar index on the short side before we actually get the long. And after that, we're on our way. So I'm going to pull up this week's news, which I have here. I always check the news. If I drag this over here, today is Tuesday. There isn't any high impact news now. I always look for high impact news first. I make sure that I'm specifically looking for news that relates to the dollar, Canadian dollar, when I'm looking at price action analysis. But in the case of this situation that we're looking at with the dollar index and dollar major pairs, we need to look at dollar news. So tomorrow, what do we have? Now, lo and behold, tomorrow we have a few things. We have the consumer price index at 130, which of course CPI is very closely linked to inflation by a strong measure. And this will cause the price to give us extreme bullish activity or bearish activity on the price. Now, what the result will be, of course, will determine that. But the key here is that why is CPI so important? Because it shows how much inflation there is. The consumer price index lets us know the cost of goods and services, you know, in terms of inflation. So, for example, if the CPI goes up, what that means is that the cost of nominally, so it means in terms of not buying power wise, but the amount. So, for example, for me in the UK, let's say, for example, bread costs £1 at 5.5% here. But when it gets to 5.6, bread will cost £1.09. So it means nominally, it costs more money, or there's a demand for more pounds for a certain good, in this case for bread. Now, in terms of how the market interprets that, when there's higher demand for a currency, it's bullish. So even though it's bad for us as people, as consumers, it's good for the economy because nominally there's no financial gain for businesses. Okay. When this number goes down, it's usually seen as bearish in the market, and it can change depending on the overarching themes that are in the market. If the number goes down and it costs less, that means that consumers are winning. It means that it costs less, which is good for the cost of living, but it's bad for business because for the same goods and services, they're having less nominal money circulating in their hands. Okay, that's simply what it means. Now, it also affects stocks as well and stuff like that, but this is what the number represents. So this right here can definitely be a fantastic trigger for us to have the beginning of the movement entry for entries that we're looking for. Now, usually Wednesdays reversals are situated between Wednesdays and Thursdays, sometimes Tuesdays too, but the timing seems to be perfect here. So that's the first possibility. Second one is later on in the evening. For me, 7 o'clock UK time, 7 in the evening. We have the FOMC minutes, which is the Federal Open Market Committee, which is the group of intelligent PhDs, including Jerome Powell, who share out their meeting minutes about their decisions about where they're going next with the economy. Now, with this piece of news, this is a written piece of news. It's a report. It's not necessarily data figures that you can read. You can read the documentation that has data figures in it. But what it really shows you is the mind of the Federal Reserve and what they're looking for next. If they see that, for example, inflation is persistent and there's going to be a need to raise interest rates higher, that would be seen as that will cause a reaction in the market. So the FOMC minutes, now there is market manipulation involved, and at 7 o'clock, the market may just start to move randomly, which wouldn't make sense because, of course, you haven't read the news yet. I do believe that there's institutional bots that the second the news comes out, they have bots that read through the news. They've been designed to sift out the key information and cause a reaction on the market already. That's my belief, because seeing how powerful algorithms and being a programmer myself and the capabilities that are available, I wouldn't be surprised. However, this second piece of news is also going to be a very strong piece of news that can cause the market to start to move. Now, with the FOMC news, which is important to note, is that the market doesn't usually react straight away. Sometimes it does, sometimes it doesn't. But the FOMC minutes can really go over into next week in terms of reaction. The market could come out with the news, nothing much happens. Tomorrow, based on this news in the US session, after, different market participants reading it, institutional levels of money and above, we could see very strong reactions and price action movements, happening because of it. So I believe Wednesday is the trigger, and I'll be interested to, see what's going to happen. Now, I've left out the Canadian dollar news because that is a separate issue, but the Canadian dollar news, of course, itself can also be a trigger. Canada's news does affect the US dollar in terms of pairs, price action pairs, and you may see spikes on different pairs because of that. Okay, so I wanted to keep it short and sweet. Those are my two major pairs I'm looking at. Please make sure you subscribe, guys. Share your comments. I'll be on Discord sharing the analysis. I'll put the breakdowns on there. On LinkedIn, follow me. Okay, connect with me. I'll be sharing the algorithmic technology that I've got planned out, and the GitHub repository will be filled up with more stuff so that you guys can have tools to use. So I'll catch you guys later on. Have a great day. Take care.